downgrades SBI, we'll find out what you should be doing with your banking stocks. Now, Centrum's G. Chokalingam picks Bharat Electronics and EID Parry as smart investment options. We'll find out why. We'll also tell you what you should be doing with your L&T stocks on this show. Welcome to All About Stocks. It's a pleasure to have you join us on this show. Remember, this is a show where we track the markets and find the stocks that will make you rich in the long term. Now, before we talk about specific stocks, let's go across to my colleague Darshan, who brings us the big developments in the stock market this week. Darshan.
What we saw in the market this week, a negative closing for both the Sensex and the Nifty. Friday proved to be a saving point as far as the market is concerned. A big rally that came on the Sensex and the Nifty. But if you take the 4 days, because it's been a truncated week this time because of the Sera, 1.4% is the drop that we have seen as far as the Sensex and the Nifty goes. The mid caps and the small caps, they took a bigger toll, almost down 2.5% to 3% for the small caps and the mid caps. But the last day, a big savior for the market. Some of the stocks that did very, very well, stocks like Reliance Power, IDFC, Reliance Infra, which had actually taken a big knock during the last week, they actually seem to recover. A big short covering rally coming in on Friday, and a lot of fresh buying happening on some of these counters. Some of the counters that didn't do well, SBI posed a big downgrade by Moody's. That is something that you want to watch out for. Bharti Airtel was down 6.5% post, and you know, the negative news flowed in as far as the Goldman Sachs report that came in on the counter. But the big story that we are following this week has to be SBI. The stock tanking more than 8% this week. On Friday, we did see a little bit of recovery, but once the downgrade came, it took down the BankX and most of the banking stocks along with it. Now, the news is that Moody's actually downgraded the ratings of State Bank of India on a standalone basis. What they've done is they've downgraded the ratings from a C- to a D+, and post the downgrade, a big fall came in as far as the markets were concerned. What Moody's are saying at this point of time is the fact that NPA issues are still there. They will continue to grow as far as SBI is concerned. They are saying that the Tier 1 capital that SBI has is not sufficient to actually boost the growth that it has in terms in times when interest rates are rising. And they are saying that SBI has limited ability to actually manage its capital at this point of time. Couple of brokerages also came out with reports indicating that borrowing for SBI in the overseas markets will be a little difficult given the fact that there has been a downgrade. International business margins will be under pressure.
Thanks, Darshan. Now, like we promised, G. Chokalingam, Chief Investment Officer of Centrum Wealth Management, joins us now to help us make sense of all that information that Darshan just shared with us and help us understand how it will affect our investments. Mr. Chokalingam, thank you so much for joining us on All About Stocks. We know the big story that we're talking about is that downgrade that Moody's gave SBI this week, saying it was mainly due to inadequate capital, possibly a drop in asset quality. Now, Darshan was telling us that stock was punished severely during the week. It's trading still now. It closed the week close to that 52-week low. Obviously, this will impact the cost of overseas borrowing, but since the bank only borrows about 7% of its funds from overseas, how do you expect this downgrade to finally impact the company and the stock in the medium term?
Yeah, I think the way the downgrades are happening across the world within India, I think investors will not have moved to listen to these great changes. For simple reason that it is too late, because the entire world knows what's happening in the banking space. And for two reasons, I can say that it will not make any significant impact. One, it's already known to many, and two, as you said, our dependence on foreign capital is very low. It's hardly 5-6% for the entire banking space. And the impact of this downgrade also is estimated to be around 2 PPS for SBI. So therefore, it's not going to impact. Very important point is that even if you look at post 2008-9 Lehman episode, our Indian banking system remained robust. And, there was a growth in the profit as well as there was a growth of 17% in the business. So, therefore, this will not have much impact except, that day the news comes, there could be some impact on a specific stock, but it is not going to put down the momentum in the market.
So for retail investors who are currently holding SBI stock, would you say not to worry and continue holding on to it?
We're not been very optimistic on SBI for simple reason that the chairman himself said In Q2 also, there will be some spike in the provisions. However, the way the stock has been punished to the extent of close to 50% it's from peak, I would advise not to get panic and sell it. One can wait for some recovery, and then probably one can switch, after some significant recovery from SBI to some other good banking stock in terms of, quality of assets and operating efficiency.
We also know that, Mr. Choklingan, that Moody's came out a little later in the week and said maybe ICICI Bank or the private pack is much stronger than the public service banks right now. Is that also your view? When you say switch to a stronger banking company, would you recommend maybe one of the private banks?
Definitely. The way I look at it is that one, the PSU banks come under pressure whenever there is a business cycle and a slowdown in the growth. They take up the mandate of, social costs in terms of, not letting down the momentum in the credit. So therefore, they become victim during the downturn. So the best thing to do is to look at private sector banks. Especially, you can look at the private sector banks whose outstanding net NPA is hardly 1/3, 1/4 of a quarterly net profit. So if you look at that as a basic guiding factor, you can look at banks like HDFC Bank, Yes Bank in the large cap space, whose outstanding net NPA is less than 1/4 of just a quarterly profit. So they would be in a better position to manage the stress on quality of assets.
All right. So you mentioned HDFC Bank and Yes Bank. Now we also know that SBI spoke to us, to the channel. They said they're expecting the government to bring in maybe 3,000 to 5,000 crore rupees by the end of the year. Do you think that's going to be enough for such a large bank, 3,000 to 5,000 crore rupees from the government?
It won't be enough because let us understand that the so-called erosion in the tier 1 capital below 8% even for SBI is partly on account of prosperity happening in the industry, in the country. In the last 10 years, the credit growth has been phenomenal. About 10 years back, the credit base was about 7 lakh crore. As of now, it is close to 41 lakh crore. And, though RBI has set 18% target, till right now the banking credit is growing at as much as 19 to 20%. So, while the denominator is rising, that is credit base is rising very fast, by same extent, the capital is not rising. So, therefore, the SBI has faced a problem. So, using the same logic, one can say that, whatever they infuse, it's not going to be enough because this is happening when the industry growth has slowed down. The GDP growth has slowed down to around 7.7. So imagine what is going to happen if, within 6 months or 9 months, if India's GDP picks up above 8% or 8.5%, again there will be a lot of, stress on the credit growth and therefore tier 1 capital would have again pressure. So this won't be enough, but I think the moment the market recovers, maybe in a matter of 1 quarter or 2 quarters, SBI will be in a better position to go for rights issue and manage the problem.
And what are your expectations from SBI in the earnings season right now? Do you expect to see good numbers?
Yeah, expecting a good number would be a very optimistic scenario, too optimistic scenario, because it also depends upon the leadership objective. The new executive said that, you would clean up the balance sheet and you would increase the provisions. So therefore, I am expecting, the profit growth profit to decline. There could be degrowth of even 5 to 10% year-on-year basis. So probably that could be the better day to consider if at all somebody wants to do any trading call. But otherwise, I'm not very optimistic on Q2 number for SBI.
Right, we have a question that's coming from one of our viewers. Sanjay Das has written in. He tells us he's holding SBI shares which he bought at 1,980. He wants to know if he should continue to hold on or should he sell at this point? What would be your recommendation? You said wait till it comes back up a little bit. But how long would you advise him to wait on this stock?
For retail investors, I would always suggest a better bet because, the retail investors have one advantage which the institutional investors do not have. That is, banking on some good mid-cap value stocks. So even in the banking space, they are available and they are known for creating solid wealth over the period of time. So particularly coming to this SBI question, what he can do is that he can, wait, he can hold on to it. There is a chance of significant recovery in SBI stock after Q2 results. According to me, all the worst things would get over by the day these Q2 results are out. So probably after that, once he recovers fast, he can switch from SBI to some, mid-cap stock like Karur Vysya Bank. It's a solid wealth created over a long period of time. But it is very conservative and he doesn't want to wait for a long term. Then he can switch over to stock like HDFC Bank or Yes Bank. But definitely you can wait, for the recovery in the stock price, which can happen after the Q2 results are out.
All right, Sanjay. That's the advice going out to you. Remember, as a retail investor, you have the advantage of time on your side. So, Mr. Chokalingam, they're telling you to wait out this SBI beating that we've seen happen over this last week. Wait till the results come out at least and see how that stock recovers, and then use that opportunity to possibly book out of it. Taking a quick break on the other side, Mr. Chokalingam has picked 2 stocks that we should be investing in. We'll tell you why. And remember, you can write to us. There's an email ID at the bottom of your screen if you have any questions about your stocks and your investments. Come back after the break.